If you want to be a successful trader in 2026, you do not need more indicators, more signals, or more opinions. What you need is structure, discipline, and a repeatable process that works in real market conditions. Most traders fail because they overtrade, they chase moves, and they trade emotionally. The market does not reward activity. It rewards patience. The first rule for 2026 is simple. You do not chase trades. You let trades come to you. If there is no clear opportunity, you do nothing. There will be days where you do not trade at all. That is not a weakness. That is professionalism. The second rule is focus. You do not need to trade all day. In fact, trading all day usually leads to mistakes. The best opportunities happen during specific times when liquidity and volume enter the market. For Forex traders, the most consistent periods are the London session and the New York session. That is when institutions are active and price moves with intent. You do not need to look at every time frame. In 2026, simplicity wins. The most effective timeframes for active traders are the 5-minute and 15-minute charts. They are fast enough to find opportunities, but slow enough to avoid noise. You are not trying to predict where price will be tomorrow. You are reacting to what price is doing right now. Before every trading session, you do the same thing. You mark support, resistance, and obvious trend structure. Nothing fancy, just levels that price has already respected. If price is consolidating, you stay out. Consolidation is the market telling you there is no edge. Patience during consolidation protects your capital. When volume enters the market and price breaks structure with conviction, that is where opportunity exists. Breakouts with volume matter. Breakouts without volume usually fail. You do not need to catch the entire move. You do not need to be perfect, you need consistency. Taking a clean part of the move again and again is how accounts grow. Risk management is non-negotiable. You never risk more than 1% of your account on a single trade. Ever. One bad decision should never destroy weeks of progress. The goal is not to win every trade. The goal is to survive losing streaks, so you are still trading when conditions are good. A realistic win rate for a disciplined Forex trader is between 45 and 60%. Depending on the strategy. Profitability comes from risk to reward and discipline, not accuracy. Another key rule for 2026 is timing. You do not trade whenever you feel like it. You trade during your predefined window. If nothing happens during that window, you stop. Tomorrow is another day. This one rule alone eliminates revenge trading, overtrading, and emotional decision-making. Forex trading is not about excitement. It is about execution. This framework works because it aligns you with how professional traders operate. They wait, they prepare. They execute when conditions are right, and they walk away when they are not. Now let us talk about something that matters more than most people realize: execution and trading conditions. Even the best strategy fails with poor execution, high spreads, and slow order fills. That is why choosing the right broker is critical. If you are serious about trading in 2026, you need a broker with fast execution, tight spreads, and reliable platforms. This is not optional. This is part of your edge. When you combine a simple, disciplined framework with a professional trading environment, you give yourself a real chance to succeed. This approach is not flashy. It does not promise overnight riches. What it offers is something far more valuable: consistency. Trading is a business. And businesses are built on systems, not emotions. If you commit to patience, structure, and proper execution, 2026 can be the year you finally stop gambling and start trading.